evidence the economy is improving, but those benefits aren't being seen everywhere. Despite cooling inflation and a pause on interest rate hikes, consumers are still feeling the impacts of high prices, especially for car buying and shopping. Channel 8's Matthew Mittleiter has more in this week's Your Wallet.
Nearly 1/5 of new car buyers are paying more than $1,000 a month for car payments, an all-time high according to a financial advisor with Stonebridge Insurance and Wealth Management. He says monthly payments have risen significantly in the last few years because of high interest rates, inflation, and supply chain issues.
You could just drive by a lot, go down south, drive by one of the lots on Yankee Hill, and for about a 2-year period, they spaced the cars out because they didn't have any inventory.
Right now, the average monthly car payment is nearing about $730 in the United States, according to transaction data from Edmunds. They also say more than 17% of car buyers are paying over $1,000 a month for a new car. That's up nearly 5 percentage points from a year ago. The Federal Reserve is signaling that it will continue to raise interest rates, meaning car payments will likely get more expensive.
Now's a pretty rough time to buy a new vehicle, and what ends up happening is a lot of people end up with what we call negative equity. They owe more than the car's worth because as soon as you drive that car off the lot, what happens? The value goes down, right?
Wall Street economists largely agree, saying the feds will raise rates by about 25% this month, but then stop. Winners Circle Auto Center in Lincoln says now is a good time for trade-ins.
Trade values are much higher now than they have been in the past 3 or 4 months, so that's a positive thing. So if you're looking to get more out of your trade, right now would be a great time to do so.
If you're planning to buy a new or used car, experts have some advice. Make sure you can afford the total cost of the vehicle, including interest over the length of your payments. Kohlhanick says in the first quarter of this year, 36% of car loans were for 67 to 72-month terms. And with such high interest rates, you could end up spending thousands more than a car is worth. He also said it might be a good idea to wait a while before buying a new car if you can. Instead, spend your time saving up some money for when prices and interest rates go down.
You have to be willing to delay gratification. Car lots are there to sell you a vehicle. That's their job. And not necessarily sell the vehicle you want, but sell the vehicles that they have.
Kohlhanick says to avoid overpaying, do a lot of searching with both car lots and banks, and even get pre-approved for a loan ahead of time. Reporting in Lincoln, Matthew Mittleiter, Channel 8 News.